Hello, this is the Chart Profit video. About 90 minutes into the trading day, Thursday 28th of September. This from the pre-open. We're looking at the E-mini S&P 1 month controlling price emerged on the December contract in the period ending about here. Pointed that out pre-open on this day here, Thursday the 21st. Is this a level here? And that value area, in fact resistance at that level, with that value area being built below that point, and the next three, in fact just about yesterday's value area as well. So 25.03 is the 1 month controlling price, and I say that it's the level to watch, and price printing time above that resistance would be short-term positive. You can see on the current half-hour chart, 30-minute chart, S&P E-mini December printing just above that level currently. Time above here would be a positive. Looking now at the spider chart, the daily, important levels are the 3 month, that should be support here, 246.62. Breakout earlier this month above the August high here. Spider's been holding that level and consolidating above that level. In fact, we've seen support a couple of times at that old resistance. Still a bullish looking chart. It goes wrong in the short term if we see price below 246.62. Russell 2000 ETF IWM having a very strong week. Since this rejected probe here below the 16 month at 136, it's come very strongly higher. Broke above the July high just a few days ago. Seems to be accelerating higher at the moment. Looking here at the German DAX index, the 8 month has migrated. So this level here, 12,610 on the index, currently printing above that level in a strong price location. Price back below here will be the first indication of weakness now. UK's FTSE 100, the large cap index, underperforming its rival smaller cap indices in the UK currently. And with the 18 month still resistance here at 74.13, that's the controlling price. This currently a weak price location. There was a couple of large days down a couple of weeks ago, and the index is very slow to retrace that. Just looking back here to the S&P, this is the spider, this is the pulse chart for the S&P with the breadth indication in the middle here, taken from the New York daily breadth indicators that I follow. This is still green for good, and at the bottom here the price oscillator, although trend is up above zero, that's positive trend up, momentum is actually heading down. Be good to see that momentum indicator turning back up. Nonetheless, it's a pretty healthy looking pulse chart right now. Quick look at the sentiment indicators. This is my version of the RIDEX assets ratio. Peaked above 15 back in August, that's the highest in the database, usually a warning for the market. A very bullish sentiment there from the private investor. Following that, the ratio fell all the way back down below 9 here, recovered a little, and it's back down at the moment around 9. I said historically the ratio hitting a new high has been a warning for the market. Currently, S&P is ignoring that warning and has broken out to a new high here. This is the public poll from AAII 2 weeks ago. Bulls minus bears, the net level reached its highest reading just 2 weeks ago for the year to date. Since that point, the S&P has broken higher, and the level of bullish enthusiasm in this poll has actually stepped back a bit. Bulls percent this week was lower at 33.3. That's down from 41.4 2 weeks ago. As I mentioned, that was the highest since January. Bears percent was higher at 28.7%. This week that's up from 22% 2 weeks ago. That was the lowest since April 2016. This is the Investors Intelligence, records the newsletter writers' sentiment. Seems to be moving very much counter to the public poll. 2 weeks ago the bulls percentage was at 47.1%. That was the lowest since November 2016. It's higher this week, 54.3%. And the bears percent was up at 20.2% 2 weeks ago. That was the highest since December. That's a little lower now at 17.1%. This is TLT, the T-bond ETF. In the longer term, as long as TLT holds above this level, 121.63, it's in a strong price location, but as you can see from this daily chart, following this rejected test of the June high, Bonds have come off pretty sharply, especially in the last couple of days here. So we've seen a pretty risk-on response to statements this week, and GLD, the gold ETF, is also off quite sharply, again down over the last couple of weeks from its August high. But this level here in the longer term, 119.84, is the big support. That's the major controlling price. If price remains above that level, it's in a strong long-term price location. Looking at the oil fund here, USO. Last week we had a little consolidation here above its major at 1014. USO has today printed its highest level since May. As long as it holds above this level, it's in a strong price location. Okay, the dollar index here, we've been following this level here, the 3-month, likely, quite possibly the 4-month controlling price now at 93.41. It was built in here. We've had a series of lower lows and lower highs that you can see here since the start of the year. A clear downtrend, and currently we have a bit of a test here. We've had a rally back to that 3-month at 93.41. Currently we're printing below that level, but price being accepted, or price printing time back above there, may indicate a turn is coming. I'm not currently convinced, but we'll see how that pans out. On the Euro FX chart, you can see pretty much the inverse of the dollar index with a series of higher highs, higher lows. If the chart prints below 116.61, it would disrupt that pattern. We'll look at the dollar yen chart. I've made a note today that the half range off the December high, the dollar yen is at 112.98. The chart has just probed that minor resistance, 112.98. Just probing up into that resistance the last couple of days as per the dollar index. Let's watch those two charts together and see how price behaves relative to those resistance levels. Price back below 111.30, the 2-year here, so price down here would put this chart back in a weak position. Currently, strong price location for this chart above that level, but needs to convince by breaking and holding above this halfway point. Finally, the pound dollar. As we know, when the chart broke above the July high, at this point accelerated higher, having consolidated just here a little pattern above its 5-month. This now is a strong price location for the pound dollar, retraced for a good few days, but currently holding that halfway point off the Brexit high to the low in September. And until that breaks down, this indicates strength here, so that's the assumption. Just going to zoom in here. It's the last 2 months. Just going to look at this rally here, a little more detail by looking at a distribution chart, very short time frame, sampling rate of 5-minute distribution over that period. You can see that the minor controlling price is at 134.91, and in the short term I wouldn't want to initiate any longs below that level, 134.91. This dotted line here, or dashed line here, represents a level which I believe may attract time, 134 dead. So I think this point could attract more time, but this one, 134.91, I want to see the pound back above that level before assuming higher and a breakout in the short term. In the legacy commitments of traders data, commercials position, net position at the top here in black, at its lowest point in almost 2 years. Worth paying attention to when their net position hits an extreme, in my opinion. They became very bullish at this point. And the large traders and hedge funds in blue in the middle here, the opposite, at extremes they're usually wrong. They were very short at this point. Generally you want to follow these guys until they hit a long-term extreme, and at the moment the commercials that you fade until they hit a real extreme are pretty negative, and the long-term traders and hedge funds that you follow until they hit a real extreme are pretty bullish. So from just a quick appraisal of this, I'd say that commitments data looks pretty healthy still for the British pound. Okay, that concludes. Thank you for watching.